Good day traders, this is the FX Big Dog and welcome to this week's market update. If you have any questions about this review, you can email me at analysis@infinitumfx.com, or if you prefer to have a one-on-one private chat, you can go to our website and click onto one of the online support links. Important disclaimer traders, trading the forex market is risky and only intended for investors that understand and can afford the risk. Note that this video presentation is for educational purposes and not offering trade recommendations. If you choose to follow a trade presented in this video, you can do so at your own risk. We understand that all traders have full understanding of the risk and are responsible traders. Do not trade a live account unless you have traded a successful strategy on a demo account for a good period of time. Alright traders, without further ado, let's get started with the currencies, and we're going to start with the Great British Pound 240 time frame. Remember, we only look at the 240 time frame because we're looking at the medium term outlook. Right now we are bearish overall on the medium term outlook. As you can see, we're still holding below this down AB swing. We are in retracement. The market has pulled back to an 8.6 bounce. What is traders looking out for is whether the market's going to take out the high at 64.10. If it does, we're looking at a bull crown setup. If it holds below the high, takes out this trend line going up right here and trades short of this trend line, we're certainly heading towards the below down here at 58.31. Remember, before we can even look at the objection point, we need to get out of the AB swing first. The AB swing is still holding here at 64.10 and 58.31. Looking at the euro is overall bearish, still holding in this down AB swing, although the market was in retracement and now looking like it's probably on its way down to the objection point. What we want to see is, of course, notice that there was consolidation. The market broke out to the north side, got to the 8.6, came back inside consolidation. What traders will be looking out for is perhaps the retest of the support area right here, which was in fact previous resistance of this range. The support will come off the 44.55 area, which will then become resistance as the market comes back up to retest that area. So traders will be looking out for selling pressures at 44.55. Looking at my apologies, I want to go to the Swiss franc. Looking at the Swiss franc is still in an up AB boundary. You can see there it is, coming off the low here at 99.09 and the high at 5.10. Now, it showed a bull crown setup. The market expects a pullback as deep as maybe perhaps 1.0034, but I don't know. Maybe it's not going to quite get there, but who's for me to say it is? What we are looking out for is, of course, looking out for this retracement to exhaust itself. Now, what we'll be waiting for is, of course, the high here at 382 to be taken out to confirm that we're now in a bullish short-term swing, which will confirm that the retracement has completed itself and we're now in the extension towards the objection point. So short-term traders, hold short right now, stay short right now until the high is taken out at 383. Once the high is taken out, we can certainly follow the direction of this intermediate swing, which is the medium-term outlook. Let's go and take a look at the JPY. The yen is looking still very bearish in the retracement. Remember, we are overall bullish on this up AB swing. The market pulled back to a 382 bounce, but still hasn't confirmed that that 382 bounce is holding support yet. We have no confirmation of the change in direction of the retracement. The retracement is still very much bearish. So traders will be looking for the confirmation to confirm that we are now bullish, and that confirmation could come from this trend line break right here coming down and perhaps the high at 92.05. Once that's broken, then it's confirming that the bulls are starting to take control, and then we have the smaller time frames that should be rather bullish, and that will then confirm that the retracement has exhausted itself, and now we are extending on the bullish run. So right now, overall bearish, but still in overall bullish, but still in a bearish retracement. Let's now move to the Australian dollar. Australian dollar is in a range right now. It is still in an up AB boundary, so overall still bullish. It is range bound right now between 93.22 and 91.71. On the upside, if it takes out the high at 93.22, we'll certainly be looking for the objection point, which will be indicated at around about 96 and change. There it is, there 96.87. That will be the objection point for the move as it breaks the B high. On the downside, if we take out the low here at 91.71, it will be chasing after at least the 382 bounce at 90.97. We'll have to wait and see if it holds at the 382 bounce and takes off and heads to the objection point from that area right there. Well, once that break of 91.71 occurs, we can start looking at a possible move down to 382 pounds and maybe even the 618 pounds. And we'll then, of course, look for that that confirmation of direction change before we start trading bulls. Let's go take a look at the Canadian. If my voice sounds a little bit funny, my apologies. I'm coming off a bad cold, so I have been taking a bit of strain with regards to that. Alright, here we have the Canadian. If I compress the charts to see what the larger outlook looks like, you can see, there we go, the market is still bearish, and what confirms it now are these smaller swings going down south. So we're holding bearish overall on the medium-term outlook. The bearish swings coming off the short-term swings are confirming that we are extending ourselves to the objection point. The scalpers and day traders will certainly be taking a lot of trades going down south, following the downward trend as we see it with the medium-term outlook. Medium-term outlook is bearish, and so are the short-term swings. So pretty much confirming each other, so we can go ahead and start trading those short. So stay short with the short-term swings right now. It's certainly on its way to the objection point. Objection point will be coming down at the 127 here at 99.92. Remember, we still need to take out the low at 205. We're still trading in the AB swing, but it's certainly showing that it's on its way down. And once it takes out the B at 205, we'll certainly be chasing after 99.92. Let's go take a look at the in fact, I think that's it. I think we've gone through each and every currency pair. I want to make sure of that. Yeah, we have the New Zealand dollar. No, we haven't looked at this, but this is the New Zealand dollar. We can see the New Zealand dollar is still in an up AB boundary. The market is looking for a pullback to find support. We can see with the short-term swings that it's still bearish right now. We still need to look for deeper retracement, possibly down here at 72.63. Once that target is hit, we can start looking for confirmation of direction change. Right now, nothing else but bearish on the New Zealand dollar. Now, this bearish movement would not necessarily mean that the overall direction is bearish. The overall direction is in fact bullish, because we're in an up AB boundary. We're just in retracement of this up AB boundary, just looking for retracement. Once we confirm a reversals on the smaller swings, we then can start looking for the market to start showing us smaller bullish rallies that we can perhaps trade from there. But those traders that are trading short term and scalping and doing day trading, perhaps you are still bearish right now, as we are still in retracement of the medium term outlook. Alright traders, that pretty much wraps it up and concludes the market review for today. I trust that the information discussed in the session helps you become a better trader and helps you make better informed decisions in this market. This is the FX Big Dog, wishing you joy, peace and successful trading.